By now, if you don't have any plans for your CPF OA money and still have not invested it yet, you are missing out on a lot of returns. Because while your CPF OA money is just sitting there doing nothing like a lazy bum earning that tiny 2.5% interest, everyone else is using it to invest and earning like 4% or more. Add in 30 to 40 years worth of magic of compounding, you are going to miss out on even more returns. So in this video, I will share 3 ways on how you can easily invest your CPF OA money, from the lowest risk method all the way to the highest risk, highest return method. Alright, let's jump right in. Okay, before we talk about the best place to invest your money, let's first talk about which is the best bank to open your CPF Investment Scheme Account. There are 3 banks which you can choose from: DBS, OCBC and UOB. For shares, UOB is charging the lowest fee at $2.16 per 1,000 shares, maximum $21.60 per transaction. Same for fixed deposits. UOB has the lowest fee at $2.16 per transaction. For service charge, all 3 banks are charging the same $2.16 per counter per quarter. So if you want the lowest fees, go for UOB. Okay, with that being said, let's start with the best lowest risk method to invest your CPF money: fixed income. For this, you have 3 options: bank fixed deposits, T-bills and SGS bonds. Let's go through them. Currently, OCBC is the only bank offering fixed deposit for CPF. Previously, they were offering 3.88% per annum for 8 months, but now the yield has dropped to 3.5% per annum for 6 months. So, too bad. Hopefully, the rates will go up in the future, yeah? For this, you will need to invest a minimum of 20k. Also, according to CPF, even if your bank is not with OCBC, you can still place the FD with them. So, that's good. Next option, T-bills. Unlike fixed deposit, which is available all the time, T-bills is only available every 2 weeks. And we have no idea what's the yield until the auction is over. But in the past few months, the yield were around 3.6 to 4%, with the latest T-bill offering 3.85% per annum for 6 months. Lastly, SGS bonds. SGS bonds are only available every 4 weeks, and every time the tenure is different. For the next round, it will be a 5-year SGS bond. But what would the yield be like? Looking at the data, we can expect the next auction to have a yield of around 2.9%. So, if we compare the current yield, T-bill will have the highest interest of around 3.85% per annum. But according to Gupta-san, T-bill yields are expected to drop in May. So, if you want to lock in a high yield for a much longer period, you can go for the SGS bond instead. For T-bills and SGS bond, if your CPF Investment Scheme Account is with DBS, you can apply for it online now. OCBC has also enabled it recently, while UOB is planning to let you do so by end of the month. For fixed deposits, you have to go to an OCBC branch to apply. But don't be dumb and just go queue there for 3 to 4 hours, yeah. We are already in the 21st century. Just use OCBC Easy Queue to take a queue number online, then head down when it's almost your turn. So those are the lowest risk methods to invest your CPF OA. Good if you don't like to take risks and want to just earn a steady from BP 3 to 4% interest. Quick pause. One of the many things that I like about Weeboo is that they let you earn interest on your idle cash. With Moneyboo, you can now earn up to 4.7% yield on your idle funds. There's no fee for using it, and best of all, you can easily use the money to trade stocks without any delay. This month, Weeboo will be continuing their super generous deal. By just funding any amount and maintaining the fund for 30 days, you will get 5 free stocks worth up to $500. So if you still have not signed up to Weeboo yet, you can easily sign up using my link down below. With that being said, let's get back to the video. If you want a higher return, you have to invest in the stock market. Okay, there are a whole bunch of stocks that you can invest in. If you are super confident in your investing skills, you can just do that to potentially get a much higher return. But according to CPF report, about 1/3 of people who invested their CPF money either lost money or earned less than 2.5% return. So if you want a safer way to invest, you can invest in ETFs, which is basically a basket of stocks. Currently, there are only 6 ETFs for you to invest in. But I have two recommendations. The first one is either Nikko M STI ETF or Spider Straits Times ETF, which track the Singapore market. Both of them have the same 0.3% expense ratio, 3.7% dividend yield, and have given around 3.5% 10 years annualized returns, including reinvested dividends. Or if you want an ETF that has a higher dividend yield, you can go for Nikko M Straits Trading Asia ex-Japan REIT ETF, which tracks REITs from Asian countries. It has a slightly higher 0.5% expense ratio, 5.3% dividend yield, and has given about 3.67% 10 years annualized returns. For investing in these ETFs, there are two cheapest brokers that you can use, Poems Cash Plus or FSM1. Let's compare their fees. Poems Cash Plus is charging a 0.08% fee, while FSM1 charges a flat $8.88. If you are buying a small amount of shares, like $100 worth of shares or $1,000 worth of shares, go for Poems Cash Plus, as they will be the cheapest. But if you are buying more than $11,000 worth of shares, FSM1 would be the cheapest instead, as the fee is fixed at $8.80 no matter what. If you are interested in opening an account with any of them, you can just use my links down below, yeah? So that's Singapore ETFs. The good thing about them is that they are quite stable and pays out a stable from PP dividend passive income. Good if you don't want to see your investments drop by 50% and get a heart attack. But if you want a higher risk, higher reward, you would have to invest in overseas funds. For this, you will have to use either endowers or money out to invest your CPF money. Let's start with endowers first. For the US market, you can invest in the newly launched Amundi Prime USA Fund, which tracks large and mid-cap US companies. Then, for global companies, endowers also started offering Amundi Index MSCI World Fund, which tracks companies from 23 developed markets. As for money out, they are only offering the Lion Global Infinity Global Stock Index Fund Share Class C. Sibei long names, yeah. This fund also tracks stocks from developed markets. Okay, let's compare them. For the Amundi Prime USA Fund, only endowers offers it, so there's nothing to compare here. But for the global fund, endowers actually has two funds, the Amundi Fund and the Infinity Global Fund. But since the new Amundi Fund has a lower expense ratio, it can fully replace the Infinity Global Fund. As for money out, it's only offering the Infinity Global Fund. But overall, you can see that endowers has lower fees for both expense ratio and management fee on all funds. So it's best to just use endowers to invest your CPF money in overseas funds. And again, if you want to sign up to endowers, you can use my link down below to sign up and get a $20 discount off your management fee, yeah? So those are the few ways you can invest your CPF OA, from the lowest risk all the way to the highest risk. But if you want to learn more, you can join my fast-growing community in Telegram, where you can ask me and other members further questions. Anyway, that's all for today. Hopefully you find it useful. Like, share and subscribe, as I'll be posting new videos every Monday, Wednesday and Friday.